This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European gas prices soared more than 30% on Tuesday as low supplies from Russia reignited concerns about an energy crunch as the region heads for colder weather. A key pipeline which normally delivers gas from Siberia to Europe continued to work in reverse on Tuesday, traders said, sending flows from Germany to Poland, while supplies of Russian gas from Ukraine to Slovakia were also subdued. Russian energy exports have been in the spotlight amid the country's broader standoff with the West, including over its tensions with neighboring Ukraine, which is forging closer ties with NATO.
Oil prices rose on Tuesday as investors expected OPEC Plus producers meeting on output to stick with their planned increase for February based on indications Omicron would have only a mild impact on demand. Brent crude was up 63 cents, or 0.8%, at $79.61 a barrel at 11:08 GMT, while U.S. West Texas Intermediate, WTI, crude rose by 60 cents, or 0.8%, to $76.68 a barrel. OPEC Plus has been increasing its output target by 400,000 barrels per day, BPD, since August and is expected to do so again for February.
Moving on to the top news in the energy sector.
China more than halved the volume of export quotas for refined fuel, predominantly gasoline, diesel and aviation fuel, under the first allotment for 2022, while raising the allowances for low-sulfur fuel oil by 30%, industry sources told Reuters on Tuesday. The deep cuts to refined fuel, largely expected by the market, was in line with the Chinese government's recent policy to curb excessive domestic refinery production amid a broad plan to reduce carbon emissions, the sources said. Quotas for refined fuel exports totaled 13 million tons under the batch, down 56% from 29.5 million tons for the first allotment of 2021.
Indonesia's coal supply situation remains critical, the state utility said, following the country's ban on exports of the fuel that drove up prices in top customer China on Tuesday. Indonesia, the world's top exporter of the coal used in power plants and China's largest overseas supplier, on Saturday announced the ban on exports during January to avoid outages at domestic generators. Indonesian authorities are set to re-examine the export ban on Wednesday. Late on Monday, Indonesia's state-owned electric utility Perusahaan Listrik Negara, PLN, warned that this critical period is not yet over, adding that it continued to coordinate with the government and other coal suppliers. Next, we have the top news in metal. India splurged a record $55.7 billion on gold imports in 2021, buying more than double the previous year's tonnage as a price drop favored retail buyers and pent-up demand emerged for weddings that were delayed when the pandemic first hit. The previously unreported details of the world's second biggest consumer nation's soaring imports were disclosed to Reuters by a senior government official who requested anonymity as he was not authorized to speak to media. The 2021 gold import bill easily doubled the $22 billion spent in 2020, and surpassed the previous high, set in 2011, of $53.9 billion, according to the official, who tracks broad import trends.
The China Smelters Purchase Team, CSPT, a group of the top copper smelters, has appointed Yang Xingban from Jinchuan Group International Resources as its leader for 2022, according to three sources with knowledge of the matter. The CSPT's appointment of Yang will last for a year, said the sources. He is taking over the post from China Copper's Feng Mingrui, who was the group's leader last year. Full story. Yang is currently the Deputy General Manager at the Sales and Marketing Department of Jinchuan Group.
Markets. We will now look at the top news in the agricultural sector.
The United States will issue new rules and $1 billion in funding this year to support independent meat processors and ranchers as part of a plan to address a lack of meaningful competition in the meat sector, President Joe Biden said on Monday. The initiative comes amid rising concerns that a handful of big beef, pork and poultry companies have too much control over the American meat market, allowing them to dictate wholesale and retail pricing to profit at the expense of their suppliers and customers. Capitalism without competition isn't capitalism. It's exploitation, Biden said. That's what we're seeing in meat and poultry industries now.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.